Thank you, Mr. Chairman. So I want to get to a bunch of questions, but I want to just start because I think we're in agreement, but and I don't mean to be cute with time, but I'd ask you just to raise your hand right now, if each of you, if you agree with the statement that corporate executives are employees of and therefore directly accountable to their shareholders. Do you all agree with that statement? Is there some gray? I see some gray area with some folks.
Yeah, they're employees of the company, and the shareholders own stock in the companies.
Yes, and if I had put all my cash into a company, I would want to have a lot of say over what the people who were managing that were doing. Let's come back to your gray area if we get there. I asked the question that way because I have just quoted Milton Friedman's theory of shareholder primacy, which is sort of the central proposition. So we agree with Milton Friedman. There's a rich conversation we could have about stakeholder capitalism, but we seem to be Milton Friedmanites today. That's fine. You wouldn't know it on this side of the room because we've had a whole bunch of debates about these uppity shareholders that are causing problems and are creating troubles for companies that don't want to be responsible to shareholders, but I digress. Mr. Copeland, over the last 5 years, bond funds have significantly underperformed equity funds. Should investors get out of bond markets? Just yes or no, should investors get out of bond markets given their underperformance over the last 5 years?
No.
Over the last year, the Dow Jones Oil and Gas Index has underperformed the S&P 500 by almost 20%. Should investors get out of oil and gas?
No.
Okay, I ask you those questions because in April of this year, you wrote an op-ed in the New York Post titled, "Having Beat Oil to OnlyFans, ESG Activists Now Focus on Big Food," and you said that the ESG bill is going to come due because of long-term economic impacts. If we agree in shareholder primacy, why should we take away investor choice with respect to that asset class, but not with respect to oil and gas, bond markets, or frankly, any other asset class that investors are free to invest in?
I don't think we should take away the ability to invest in an ESG fund. We ought to be able to invest in ESG funds. What I'm worried about are passive index funds that aren't making buy-sell decisions, voting their shares in these.
You asserted in that article that ESG funds were delivering below-market returns.
I think in the long run, an ESG fund that screens its stocks is necessarily going to underperform its market benchmarks in the long run.
On that basis, so we're mid-cap markets. Every investment fund screens stocks for a certain class. People are free to get in those as they wish. If we're going to talk about returns, though, there have been a bunch of state laws that have taken away the rights for investors to invest in ESG, which my colleagues here are trying to take away choice. Cut away all the other nonsense. They are trying to take away choice. Do you know what it has cost in those states that have taken away choice? How much has it cost the Indiana Public Retirement System when their state passed a bill banning their pension funds from investing in ESG funds? You know how much it cost them?
I'd have to look very carefully at the study, which I have not read. I'm sure you're going to say it's cost
$6.7 billion. How about the Kansas Public Employees Retirement System?
I'm not aware of the
$3.6 billion. Texas County District Retirement System. $6 billion. These are huge amounts of money that are being lost to the working men and women in this country. And this is going to be complicated for some of my colleagues here who have a hard time with capitalism. If you take away choice, you reduce supply, and the price moves, right? These are the costs that we are asking our society to impose. Now, let's talk about some facts. In the last decade, coal use in the United States is down by 40%. We used to make 50% of our power from coal. We now make more power from renewables. The fastest growing vehicle segment is electric vehicles. Oil use is flat. Consumers given the choice about what to buy are choosing cheaper energy. Investors given the choice are following the money. Capitalism works. It's also really scary if you can't compete, but it is the only way that we stay competitive as a country, no matter how much the losers cry to their benefactors in Washington and say, "Can you please take away choice? Capitalism scares me. I don't want to compete fairly. I can't compete fairly." And yet we are now sitting here having a debate, if you can even humor it with that, about whether we as a country are going to continue to support capitalism and free markets and competitive choice among investors. The party of Ronald Reagan, the party of Milton Friedman, is afraid to defend capitalism. You all ought to be ashamed of yourself. But if it's partisan to defend free markets and competitive and investor rights, let's double down on the partisanship because it's the only way we move forward as a country. I yield back.